Last week, the Supreme Court ordered the setting up of special courts to deal with the mountain of check bounce cases that have piled up in various courts across the country. The court had taken cognizance of the problem in 2020 and found that a sixth of all criminal pendency in the courts was made up of check bounce cases under the Negotiable Instruments Act. The apex court ordered the special courts to be set up in Maharashtra, Delhi, Gujarat, Uttar Pradesh, and Rajasthan, 5 states with the most number of pending cases. These courts will be presided over by retired judges, which will help free up court resources. That should bring some cheer to parties to these cases, the court system, and also to the banks. Talking about resolutions, RBI was not keen on granting on-tap licenses to entities applying for bank licenses. In a change of tack, the central bank, instead of releasing a list of entities approved, announced the entities which had been rejected. Of the 11 entities which had applied for banking licenses, 6 were rejected by RBI, whereas the remaining 5 applications are still under consideration. Apart from Chaitanya India Fin Credit, the applicants whose licenses were rejected are UAE Exchange and Financial Services Limited, the Repatriates Cooperative Finance and Development Bank Limited (REPCO), and Pankaj Vaish and others. Vsoft Technologies Private Limited and Calicut City Service Cooperative Bank Limited were found to be not suitable for on-tap licenses of small finance banks. While the RBI rejects applications for on-tap licenses, another idea seems to have fallen out of favor with the banking system. Asset reconstruction companies did not take off the way RBI wanted them to, and then there was a talk of a bad bank too. Last week, we saw the exit of another bank from ARCIL business. IDBI Bank sold its entire 19.18% equity in the asset reconstruction company, Asset Reconstruction India Limited or ARCIL. IDBI sold its entire stake to Avenue India Resurgence Private Limited, an arm of a New York headquartered global investment firm, Avenue Capital Group. As IDBI exits ARCIL, HDFC Bank is doubling down on its rural base. The bank announced that it shall make rural banking a separate vertical and shall open 1,060 semi-urban and rural branches in the current financial year. In this regard, it also announced a partnership with Institute of Rural Management based in Anand, Gujarat to create rural-first strategy to track consumer behavior, customer satisfaction, service design and service delivery. At present, only half of the HDFC Bank's branches are in rural and semi-urban areas.